Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsb@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started.
Welcome to Kaizen Time. I'm joined by Eric Jordan, a partner here at the firm. Hello, Eric.
Hello, hello.
Oh, so we are going to be going through something that I have no idea what we're going to be talking about, and that is what is Pass Through Entity Taxation.
Well, that's why I'm here.
Well, thank you. Thank you very much. So this is more for the beginning of 2024. That's why it's relevant, and this is a brand new kind of tax code or taxation. How does this all work?
So it's a newer thing that's been evolving over the last several years. We're talking about it now because going into tax season, we're right here knocking on the door of it. We want to make sure you're aware of it to bring up to your accountant if they're not already executing it for you. So it's a special nuance. And actually, I've seen a couple businesses come to us where they weren't taking advantage of it, and it costs them over $10,000 a year in tax savings. So that hurts. I mean, that's tangible money off the table just because we didn't take advantage of something that's available to us. Mm-hmm. So in 2017, through the Tax Cuts and Jobs Act, they limited the state tax deduction that you could take on your personal Schedule A tax return. I'm going to get really technical here for a second, to $10,000. I think everybody heard there's a $10,000 cap on tax deductions. So what it is property taxes, sales tax, and income taxes, all state taxes. Those are limited to a $10,000 deduction.
Okay.
So most of us lose out on that because itemized deductions have gone so high, or standard deductions have gone so high. Itemized deduction, their value has shrunk. So this really hurts small business owners who pay significant state tax, and they used to get a benefit for that. Mm-hmm. That benefit largely went away. So states counteracted that by saying, hey, you can elect to pay your state level tax that's on the profits of your business. I normally paid that on my personal return. Mm-hmm. Well, I can make an election to have that assessed and paid at my business level.
Okay.
So, I mean, actually, I think we go all the way back to 2020. Wisconsin might have been one of the earlier states to do it, and they did something different called an entity level tax. Fast forward, almost all the states now have something called Pass Through Entity Tax available, which is, again, allows you to be assessed and pay your state tax at your business entity level. So S corporation or partnership level. So what happens now is I get that tax, I pay it at my business level. Now I get a tax deduction against my business profit for that state tax. So
Sounds like a deal.
Yep, I get a deduction for it. It works pretty much every time. So say Illinois, you have a 4.95% individual state tax rate, 4.95 pass-through entity tax rate. They're exactly the same. It's always advantageous to elect that pass-through entity tax. Mm-hmm. And let's just do an example. So say we'll call that 5%. I'm a business, I profit $500,000. That is $25,000 in state tax, if my math is halfway decent. And with that, say you're in a federal tax bracket of 33%. So you're going to save a third on $20,000 or $6,000 right? Did I do my math right again? This is why accountants have big calculators
with the levers on it.
With a big lever on it.
Yeah.
There's several $1,000s in tax savings right there from just shifting tax that I normally pay here on my personal tax return to tax that I'm going to pay at my corporate tax return instead.
So one thing I want to say, and it's great that you're trying to do all this math on the fly, but really the question becomes is, should people be taking, not even should, how much benefit can a business get from this? So really, if anything, what we should be talking about with this is a small business owner should be seeing how this can benefit them, because everyone's taxes are different. Everyone's business is different, and they need to be reaching out to their CPA to find out what's working for them.
Every business owner should ask their CPA, have you considered electing for pass-through entity taxation for my business?
And as far as a small business owner, they don't need to do the math.
You don't have to do anything.
That's why you've hired somebody.
That's
right?
what your accountant's there for, right? And all you got to do is, I love the way you put this, right? Simple thing. Ask your accountant, have you considered this?
Let's talk about this.
Yep.
Hand him this podcast digitally.
And so we'll talk, when we talk with business owners, we talk about wanting to be ready to file early on in the tax season because it allows us time and energy to consider these things, make sure we're doing this, have a conversation around it because it's a change in process too, right? So you might be shocked that now I owe state tax on March 15th instead of April 15th. And I have tax estimates that are being paid through my business at a different cadence than I did in the past. Well, if you give me your stuff on March 10th and I'm getting your return done by March 15th, it doesn't give me a lot of time, energy, and effort to make sure that we have a good conversation about this. I set proper expectations. We coordinate the money movement, and we do the calculations correctly all in one fell swoop.
You never want to rush these kinds of things because that's when things get overlooked.
Yep. Right? So I talk about levers that we have available to pull after the year closes, but we could still pull these levers and save some money in tax. Well, this is one of them if you haven't previously done this. Now, for all of our clients, especially those in Illinois, we automatically made that switch, and we had those discussions. You probably don't remember it because you moved into this new cadence, into this new world, and it was just, it's been done and over with, and now we've gone through a couple tax seasons with it. But again, I'm still seeing businesses not taking advantage of this, and it's leaving money on the table.
And so, and by businesses that you've seen who haven't taken advantage of, are we talking like new clients?
Yes.
Yeah. For other. Okay.
Exactly. It's one of those things when we have somebody that wants us to evaluate their situation. We're seeing it miss time and time again, and it's surprising every time.
And we're talking thousands, tens of thousands.
We've seen at least a couple cases in the last couple months where there's at least $10,000 or more in savings by just making that election change.
That is one heck of a happy surprise, right?
Yes, it is a happy surprise of something we can install going forward, and still install for 2023 too. If we have not made that election 2023, it is still available.
Cool. Anything else you want to add in about this?
That is about it right now. Again, remember, cadences change, timing changes, money movement has to change. So there will be a period of transition if you have not done it. And again, it's not a slam dunk for every state. Wisconsin, for instance, is not necessarily a slam dunk. I'm going to save money if I make this change. Illinois is. Every state set their rates and parameters around it differently. So again, it's a conversation you must have.
Perfect. Thank you very much, Eric.
Thank you.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.